Hi, this is James Ang with Full Capital, and we've got Mark Allen of GREA here. Mark, thanks for jumping on.
Yeah, James, thanks for having me.
Yeah, so what I thought we start with is give people a little bit of your background and then maybe talk a little bit about GREA. You guys are a big sponsor this year of the Old Capital Conference, so I appreciate you jumping on.
Yeah, really excited for the conference. So I'm Mark Allen with GREA, Executive Managing Director. Have been with our team, I guess, since the beginning of 2017, but I initially went to the United States Military Academy at West Point. And from there, after or upon graduation, served in the U.S. Army for a period of about 5 years, and then came to Dallas. Was already in real estate investments and was licensed, so I thought it made a lot of sense to become a multifamily broker. So that's where I am today. Global Real Estate Advisors, or GREA, is a commercial real estate brokerage based out of New York. We have 13 offices in total right now. We are our Dallas office, which comprises of 13 brokers, pretty big team, and then 7 support staff. And we have offices across the country in Detroit, Philadelphia, Portland, Houston, Atlanta, Miami, so on and so forth. Some of these offices are more hubs, and then some of them are smaller offices, and we call them like more spoke offices where there's only 2 or 3 agents.
So what do you think makes, without giving away like the secret sauce of GREA, what do you think makes GREA different than other listing brokers?
Okay. I mean, we're very entrepreneurial. We all started as local boutique brokerages, and the majority of our offices actually joined one of the large direct lenders who Old Capital has worked with in the past, called Greystone. And we just thought there were some limitations with the larger corporate structure and how we could interact with the market. So we decided to break off and band together and join forces, just because we're all very like-minded entrepreneurial folks. And so I think just kind of flexibility, creativity, and that's not only from I guess from a company level, but all the way down to like the advisory position and selling properties. And the product that we produce, we don't look at it as just like it goes through this conveyor style, and we produce a widget and pump it out to the market, and it's just kind of a CAM process. We get really creative in our marketing efforts, and how we present the property with a unique story. So I think that's what makes us different.
So I would say the market's changed a little bit in the last 3 to 6 months. What do you think, there's a deal story out there that articulates what you're seeing in today's market? That would be an easy representation. I've got a few, but I wanted to throw it over to you and see if you have any deal stories out there, good, bad, or ugly.
Yeah. So every seller is unique. Every property is unique. I think the big question right now is, what is the seller's motivation? I think it's important for buyers to understand sellers' motivation, because there are properties that are going out to market, and sellers have long-term fixed rate debt. And if they can achieve their price, they'll sell. If not, they'll live to fight another day. So I think there's different forms of motivation, whether it be someone purchased 10 years ago and maybe, or the property 10 years ago, maybe they're aging out a multifamily, and they're tired of dealing with the property, and they're looking to retire, and maybe shift that equity into another investment asset class, or whatever the case may be. So it's like, hey, I missed the peak, but or what seems like the peak, and I'm just going to take some chips off the table. It could be, a variety of different reasons, but that's kind of what we're seeing.
Yeah, before we started recording, pretty much, I saw a chart of the amount of bridge loans that were done in 2021, and then the amount of bridge loans that were done in just sort of the first half of 2022, and the number was astronomical. Mm-hmm. And I think that's what most people were sizing to prior, whether you were a listing broker or a seller or a buyer, most people were using bridge debt. And now when you guys are looking at deals, how are you typically sizing debt? How are you typically sort of, are equity returns the same? Or are you, when you're talking to buyers, do you see them wanting a higher return or than before? Or what are you hearing from them on the buy
Yeah.
side right now?
Yeah, so it seems like, when we look at last year, and the flush bridge debt available at 75 to 80% of cost, at 300 basis point plus spreads, it was very easy, and especially, those low debt yields to get that leverage. It was very easy to achieve that 8, 9, or 10% average cash on cash return over a 5-year hold on, value add product. And today, that's not the case. So whenever we're looking at deals, we are, bridge debt is just, it's a choppy market. It's getting very expensive. The leverage is changing. So those lenders are just looking at deals a little bit differently today. And, some of them are walking in at, 6.5% plus interest rates today. And that's only going to rise despite whether they have an interest rate cap to roll that from a variable to a fixed or not. So we're looking at deals with permanent debt, whether it be bank or agency financing, and old capital is crucial in that when we're sizing up deals and providing valuations to our clients. I would say today that buyers seem more willing, with this fixed rate interest rate debt, especially with almost CPI at double-digit numbers. To lock in lower leverage, in the low to mid 60s, which was different than years past, where everyone kind of wanted to be in kind of the low to mid or upper, 70s, if not 80% on a deal. And what's that doing? Obviously, is those buyers are having to bring more equity to the table, which is diluting the return on equity. So fortunately, it seems like buyers are willing, and I say buyers, but their investors are willing to accept lower cash on cash returns. And many investors are looking at multifamily as still a very strong inflation hedge.
Yeah, I mean, when you reset your leases every year or quicker, and then also, a lot of these deals that we're taking in the Fannie and Freddie, they are 60% levered based on a 125 cover. But yeah, you're getting a fixed rate at 4.5 to 5, and then it used to be 3 to 5 years IO, and now we're seeing full term IO on a lot of these 10-year deals. And so that's giving you a little bit more flexibility on your cash flow. But yeah, when I started in sort of the multifamily business back in 2015, everything was 80% on Fannie and Freddie. And so I don't know if we're gonna go back to those days, but I think the message is if you can get 75, 80% on Fannie and Freddie, buy everything, I think is the message. So I didn't prep you for this, but we're coming up on the conference here in September. And I guess at any of the previous conferences or Old Capital events, do you have a favorite memory or connection or relationship that you have from one of those events?
Well, I mean, I think the one that sticks out to me is meeting Roger Staubach. Yeah. Obviously I said in the beginning, I went to West Point. He went to the U.S. Naval Academy. So we were able to chit chat a little bit about Army Navy football, and we had that little sense of rivalry. So that was a really cool memory. But just all in all, I mean, I really enjoy going to the Old Capital Conference to, hear great speakers, obviously connect with a lot of folks in the industry that I haven't seen for some time. And then, of course, just networking with new, industry, sellers, buyers, investors, and having conversations and making new connections.
Yeah, Roger, even at his age, he could throw a hell of a spiral, and
that was
almost took out a few people in the crowd that year. So we appreciate him coming out. And Mark, if people have any questions about either their deal that potentially they're looking at listing or getting into DFW or surrounding areas, what's the best way for people to reach out to you?
Yeah, you can always go to our website, which is www.grea.com. You can send me an email, and my email address is mark.allen@grea.com. And then, if you go to our website as well, you can see all the advisors' bios by, maybe you're not looking in Dallas, Fort Worth, maybe you want to look elsewhere. And you can find every advisor or multifamily broker's contact there on the website.
Well, Mark, I appreciate you coming on today. We'll see you in September, and hopefully the Fed has slowed down its pace here, and we can get some more deals done by the end of the year. So I appreciate you jumping on, and we'll see you in a couple months.
All right. Sounds good. Thanks, James.
All right. See you. Bye.